Ken Beckrich with us, Phoenix Online Trading Company. Whether it's the housing market, whether it is the market, whether it's stocks, bonds, do you buy, do you trade, do you refi, do you get a mortgage, do you sell your stock? What do you do? Ken's here to try to enlighten us on that. The market, you feel the market's going to go down for the rest of the season, the year?
I think that through the end of the year, you're likely to see probably a 25 to 40% drop.
Mm-hmm. Really?
Yes.
Between now and the end
of the year.
You're talking about the stock market.
The stock market itself, because what you have is everyone's talking about this taxmageddon, and on January 1st, the tax bill goes up by $500 billion, which would be devastating. To take, really increasing the amount of taxes coming out of the economy by about 25% would be a horrendous thing to take that from productive people and, quite frankly, give it to unproductive people.
Which is what will be happening.
That's exactly the deal. And people, right now, the meme is, well, even our people aren't stupid enough to let that happen. I'm not so convinced of that, but I'm also, and this is our folks in Washington, I think that though the two taxes that won't go down are going to be the dividends tax and the capital gains tax. That affects people at the high end of the income scale. So everyone says, well, we don't care about the rich, but the rich really set the prices for stocks based on what they'll pay. And if you have to pay 60% more in taxes on the capital gains side on January 1st, ain't nobody going to hold those stocks past December 31st. And once people realize that everyone's selling on December 31st, well, they're going to want to sell on December 30th. And it just backs up. So once it becomes clear that the capital gains tax is going up 60%, and at the top end that the dividends tax is tripling, stocks have to go down.
You made a statement, well, we don't care about the rich. Unfortunately, that is said a lot. But
yes.
If we were wise, we would care about the rich or the mega wealthy or the medium wealthy, whatever term, because they provide jobs for everyone else.
Absolutely. And they also, again, they set the price of stocks. So the fact that they won't pay as much for stocks means that the prices of all the stocks that everyone owns will go down. All those state pension funds that are already only funded at 57%, those funds are going to get worse, and the states will get into even more trouble. These taxes have tremendous consequence, but it is my opinion that the Senate Democrats and Obama will not support a tax decrease for the rich before the election, and then once the election comes, there's no incentive to do it. Right. And Romney's already said, if I win, don't cut a deal with Obama because you'll cut a better deal with me. And if you are a person who's going to have to pay, instead of paying 15%, paying 23.8%, you're not going to hold those stocks, and that takes it down for everybody.
How will this affect the bond market?
Bonds will probably continue to go down in yield and up in price because people will be looking for a safe haven and they don't know where else to put their money. But that's ultimately a bubble that's going to blow up on people too.
And gold, that's another hedge people look at.
Gold is a hedge.
Well, that'll send gold up.
Well,
no?
Not necessarily. It may or may not. Our analysis is that gold under about 1,500 is probably a place where you probably want to look at it. It could go up from where it is today.
16 right now, isn't it? Something
it's
like
in the high 15s, yeah. And so that's a place where there's been a lot of buying in the past. And the whole basis of what we do and what we teach at Online Trading Academy is trying to understand where do institutions buy and sell. To me, it's very clear that for some reason people haven't really figured out that this big tax increase is going to affect stock prices, but it must.
Do you think we're headed toward another dip, another double recession?
If they do not get rid of the taxmageddon, absolutely, because you can't take $500 billion out of the productive economy and not have it impact the economy.
When we come back, we're going to talk about how you feel the stock barometer is going to be an indication who walks away with the election come November. When we come back, Ken Beckrich with the Phoenix Online Trading Company. You stay right there for the Morning Scramble. Phoenix Online Trading Company, Ken Beckrich with us talking about the stock market. How will it be a barometer for the presidential election?
I think that things will be getting bad before the election in terms of the stock market. I also think you have a debt ceiling debate coming up, and I think people are going to look at Washington, see that once again it's totally dysfunctional, and for that reason I've come to the conclusion.
We see it, but we don't do anything about it.
Well, there's nothing you can do about it.
Well, you could do something in November, though.
November's about our only chance.
The system's broken.
Okay.
The basic system is broken.
The whole nature of government lends itself to corruption.
It does. It's all about power. And I will tell you, I will confess, I worked at Bain & Company for 5 years. Okay. So I have some passing idea of how that all works there. And the reality is that Romney, I don't think, will take the risks you need to take, because you have to tell people. If you're going to make major change and you don't tell people that before you get elected, you will have no mandate to actually do it. And everyone is so concerned with winning that they're not going to go out on any limbs. You know, he says, first day I'm going to repeal Obamacare. Well, he can't. He's not a king. Of course. And what he's going to find is that because of the staying on your insurance till your parents' insurance till you're 26 is going to resonate, and pre-existing conditions is going to resonate. Obamacare is going to be his Guantanamo. You're going to have he's going to say, I'm going to get rid of it the first year. It's here to stay. And that's not going to help either.
Well, talking about that, that was interesting that you said his ploy, his tact. The tact has to be stronger. We cannot just say we're going to change, because we put a man in office on the word change last time. Now, if I was advisor for the Republican Party right now, I'd say let's stay away from that word, obviously. I mean, that is not a good word right now. Well,
but you have to tell me what the change is. You have to look the American people in the eye and say, it's not the $16 trillion that we've borrowed. It's the $200 trillion we've promised to you that we ain't got. Okay, so the fact that we're arguing about how we're going to subsidize student loans or someone's contraception who's making $140,000 a year is beyond ludicrous. We're not even close to talking about the right issues. And that's where, again, you can vote for whoever you want. And does it at the margins make a difference? Of course. But ultimately, do you end up in the same place? And the problem, unfortunately, is I think you do.
Would you agree that the last president that actually was honest with the American public on our economy was Ronald Reagan?
Generally, but even there was some pretty sneaky stuff in there if you actually look at what they did on the Social Security stuff. But yes, the reason he was able to affect change is he said to people clearly, government is the problem, it's not the solution, and we're going to cut government. Now, he didn't really cut the size of government, but at least slowed the rate of growth and took some of the tax revenue out, starved the beast a little bit. But right now, all we're hearing is, I'm not the other guy. And both of them saying it, you know, and the reality is that the government has gotten so big, and we've crossed, I think, a point of no return. I don't really understand how we get this under control. Okay, good. That leads me. Okay, when we make the statement, point of no return, let's talk about point of no return. What actually does that mean? And when we say point of no return, that means we can't fix it. No, you cannot without, okay, and here's why you can't fix it. Because you and I don't want to give up all the stuff we get from the government. We don't want to give up our Medicare, our Social Security, our home mortgage deductions. Nobody wants to give up the Export-Import Bank or all, I mean, there's a million different programs, the Department of Education, the EPA, the rest of it, because none of us want to live with dirty water and air. The reality, though, is there's no money for any of that stuff. We will not vote for people. Well, then it has to be given up. We're making the statement, we're making the correction and the answer right there.
Yeah, if the well's dry, it's dry.
What do we do, Ken? What we're going to do is one day we're going to need to borrow a bunch of money from China. They'll be the only people that have it, and they will impose austerity on us. They will set our retirement ages. They will decide who gets what benefits. We will not be in control of that.
Now, what can we do as citizens, as investors, our portfolios, and so on? What can we do?
The best thing I think that people can do is to get educated about what's happening in the world and how to protect themselves. The vast majority of people, I think, are going to get caught up in something they don't understand. The way they lost money in 2000, 2008, the way they lost money on their houses, they didn't understand that they were even playing that game. I've always said to people, either learn how the market works or stay out. The problem is you can't stay out anymore because the dollar is going to lose a tremendous amount of value. The whole approach of Online Trading Academy is to try to teach people how to manage risk in a market like this and how do you actually make money in a market like this. The best you can really do right now, I think, is kind of the Voltaire idea of cultivate your own garden. Take care of yourselves, take care of your families, take care of your communities. The beast is so big, I'm not sure there's really anything you can do.
You did make a statement, I wanted to get back to that. You feel market going down would mean Romney will likely to win if he continues down. Okay. 1 minute. How do you equate that?
What do you mean? Well,
how do you put that together?
I think there's going to be a lot of despair. by this fall. People are going to see portfolios going down, unemployment's not getting any better. The manufacturing index for the first time showed contraction since 2009 this morning. Europe's got a bunch of problems. China's slowing down. They've got their own sets of problems over there. I just think people are going to be ready, to not use the word, for change this fall. And even though Obama, before I did the analysis on the market, I thought Obama would win. But if stock prices really fall 30% before this all happens, I don't think he has a chance.
Ken, thank you.
Thank you so much.
Thank you, Ken.
Appreciate it.
Thank you.
Thanks.